Presidential Wealth Management. What might be in your tax return that will make the IRS want a closer look? Why the IRS doesn't want your paper receipts, and how to keep records if you're investing in cryptocurrencies. The answers to those questions and more in this Eagle's Nest webcast. Taylor Leary wrote this: "The IRS is one of the most powerful government agencies and can make your life a nightmare. Have you ever considered what you would do if you got into the crosshairs of the IRS?" Does that kind of raise the hackles a little bit? Does that kind of make you think? Taylor, very well done. And I think you're going to enjoy what we've got for you today, along with our guest. Our guest is Mike Wallen, president of the Highland Tax Group. Mike and his company help corporations, small businesses, the self-employed, and individuals to resolve outstanding tax liabilities. And I want to give you just a look here. I printed this off of Mike's website. Mike, I hope you don't mind.
No.
These are your FAQs, okay? Bear with me for a minute. I'm just reading some of the ones that are highlighted. Will I go to jail as a result of my IRS tax liability? I think that's a question that takes a while to answer. Does the IRS lien show up on my credit report? Will the IRS revoke my passport? Are these things that perhaps you've never even thought of? I know when I read this, some of these things had never even occurred to me. What happens if I propose a compromise to the IRS because I owe them money and I never hear back from them? Believe it or not, that could mean they've accepted it. How are you supposed to know? Is the IRS able to levy my Social Security income, my bank accounts, my pension, my IRA, or my retirement account? Now think to yourself for a minute. If you were to guess, what would you guess the answer to that one is? Yes or no? It's yes for all of them. Mike, welcome to the Eagle's Nest webcast. President of the Highland Tax Group, helping people resolve outstanding tax issues with the IRS. Very quickly here, you're at a party and everybody's having a good time and you're with friends and people you trust. And they ask you, with what you do, going up against the IRS in representing people, give me your best story. I'll bet there are some whoppers. What have people tried to get away with? What have been some of the things, or what's something that's happened to you that you'll never forget?
Yeah, actually, that's a great question. When I first started in the industry, Keith, I had the opportunity to work on a case, a big corporation out in California, and they incurred about $650,000 in payroll tax debt. What had happened, just a brief story, the owner was involved in or using someone for his bookkeeping, right? And the person that was doing the bookkeeping was working in-house. He was distracted. He had a child at home, a young child who ended up becoming sick. Long story short, this bookkeeper was throwing IRS notices into drawers, was not telling him about the IRS problem, embezzling funds, things of that nature, right? So at the end of the day, he ended up paying the tax in full plus the interest. We got a penalty waiver for him totaling about $150,000 based on that reasonable cost. So when he came to me and told me his story, my heart obviously went out to him. And that's what we do here, right? We help people resolve IRS problems by looking into their case. They're not just a number. They're not just a tax ID number. They're not just a balance due. They're an entire story, Keith. And that's something I will never forget, to answer your question. That's one of the coolest cases I ever had the opportunity to work on.
Wow. With Mike Wallen, president of the Highland Tax Group, and Taylor Leary, I'm Keith Weinman, coming to you from Presidential Wealth Management.
Well, Mike, I can certainly empathize with that gentleman. That I have 2 children, a 2-year-old and a 5-month-old, and I can only imagine sometimes just wanting to take that thing in the mail or whatever we get in the mail and just push it off for later. But if the IRS is watching, you got to be diligent there. So thank you for being on today. And we're very excited to hear from Mike and the insights and expertise that he brings in battling the IRS and honestly helping people get out of the crosshairs there. But before we dive into things, I just wanted to provide you some insights on how to make this the best webinar and the best webcast that you can be a part of by taking advantage and engaging with us. So the first part that I want to introduce you to is the chat feature. You'll notice here on the right-hand side that there's going to be a chat button. What you do if you have questions, we know that the IRS, the tax world, there's very complex issues that we're constantly dealing with, and I'm sure you have a couple burning questions, and we'll do our best to have Mike and either Keith or myself answer those questions by the end of today's webinar. But if you have that question, use the chat feature to ask it. You can ask it directly of myself, Keith, or directly to Mike. And like I said, we'll do our best to get to that before the end of the show. I will say that this is going to be a private chat box. So when you put those questions in, if you're maybe hesitant and think it might be a silly question, know that only the 3 of us are going to be able to see that. If you are watching the replay, you can also put your question in there, and that'll just get emailed directly to us, and we'll reach out to you in a different form and fashion. I will also introduce you to the poll feature. The poll feature is a great way to get instant feedback from you on a particular topic or a particular subject matter. So I've got a couple of them already built in the hopper. So what I'll do is I'll make sure that you are aware of the poll feature. And what you'll see is that the question's going to be there. Answer yes or no, or however you feel best fit, A, B, or C. So it's going to be like the SATs here. And then we'll try to do our best to give you the answers or at least the results of those poll questions. So again, Mike, thank you so much for being on here today. And I'd love to hear directly from you in your words, what do you do to serve your clients and help your community?
Sure. Thanks for asking, and thanks for having me on, guys. I really appreciate the opportunity to be a part of this webinar. It's fantastic to be here with you guys, as well as our audience. So what we do here is we help resolve IRS problems for our clients. Like Keith mentioned in the past, we help corporations, the self-employed, small businesses, and of course individuals as well. How we serve our community is really by education. We try to educate our clients into paying back into the system, right? A lot of times our clients come to us and they don't know how to pay their taxes. They don't know how to remit estimated payments. They may have never been set up with a payroll service for federal tax deposits, things of that nature. So we give them the tools necessary to get current and compliant first. We want them paying back into the system so we can stop the bleeding, stop that hemorrhaging, and then we go back to correct the problem. And then, of course, the second piece to that is taking a look at our client's financial position, income, assets, equity and assets, expenses, etc. And then we determine the best possible plan to deal with the IRS tax liability. So that's in short what we do here.
I love it. So it sounds like a lot of the times it's just trying to figure out how to you're the ambulance and trying to get these people to the hospital, and then you're the surgeon trying to stitch them back up, and then you're going to try to rehab them and how to never get in trouble. So it's almost like you're the full bit from soup to nuts.
Yeah, absolutely. We often joke that we're putting together a puzzle, right? But we're having to create all the pieces of the puzzle first. Then we got to put it together, and then we got to present it to somebody and make sure it looks okay. So to your triage example, yes, we're rushing the taxpayer to the hospital. We're performing surgery. We're doing the PT work. We're doing the full scope of work for them to get them back on track with the IRS.
I love it. I love it. So I try to think that most people are good, honest individuals. Now, we obviously, and I'm sure you've seen some people that have really certainly tried to skirt the law. But typically, in your experience, and it sounds like you've worked with a lot of different people from, all walks of life, as far as different businesses and so on and so forth. So is the IRS, or do you find that people get into hot water with the IRS because of a kind of one-time event, or is it sort of a trickle, or kind of the snowball effect where it's, over time it just sort of becomes a mounting problem? Typically, how do people get in trouble and get into the crosshairs of the IRS?
That's a great question. So I would say most people get into trouble. It starts with one tax year. Maybe they had a divorce take place and they were hemorrhaging cash to pay a divorce attorney. Maybe they had a health problem, and that health problem distracted them from being able to pay their taxes or file their taxes in full and timely. And then after that, it sort of snowballs. They don't really know what to do. They get behind for 1 year, and then it leads into the next year, and then maybe they lose their job. And then all of a sudden, by the time they come in and sit with me, they're behind for 4, 5, 6, sometimes 7 tax years. And the IRS is sending them notices and filing tax liens and really threatening to do some bad things to them. At times too, it's the one-off. Hey, I cashed in my 401k. I cashed in my IRA, and I didn't pay the penalty. I didn't pay the tax due. And you guys know it's a heavy hit when you cash in those retirement plans to do something else with those funds. So, but I'd say the more consistent problems we see are amassed over a period of 4 to 5 years.
So it does seem like that snowball effect, in that, like you're trying to make it up over time, and then it's up to your eyeballs, and then the IRS really kind of digs their claws in, huh?
Yeah, absolutely. They start with one notice, they start with a second notice, and then out of nowhere they file a tax lien against you. And then it's, after that, it's taxpayers, our clients just get scared. They don't know what to do. And that's when they land on our desk and we start reassuring them we can fix the problem.
I would quote Taylor, the IRS really digs their claws in, huh? So, and that prompts a question. We think of dealing with the IRS as a battle. We do. We think we're going to war. Is it that way? Or is it something else? How should we think about it? Is it a trial? I mean, who said, you said, Mike, it's like putting together pieces of a puzzle. How should we think about it if we find ourselves engaged in this battle, trial, puzzle? What is it?
All right, great question, Keith. It can be a combination, because doing battle with the IRS isn't all that much fun, but we're really good at it, right? And so we take that problem off of the taxpayers' shoulders and we burden it ourselves. Right? So we're fighting the battles. We're going.
Can I give the IRS the benefit of the doubt in saying they don't necessarily want to win, they just want to enforce the regulations. They just want to enforce the laws. But do they want to do that in a way that doesn't destroy lives? Do they want to do that in a way that is manageable for a person with a problem so that they can recover? Taylor, did we lose Mike? Did he freeze up on us?
It does look like he may have frozen up on us a little bit here. We'll see if we can get him back here momentarily. Now, I did get a question while we're waiting for Mike. I do have a poll up, and I'll start it right there. And that is, have you ever been audited by the IRS? So I'd love to hear the audience's reaction to that. And one of the things that we are constantly faced with is the challenges of, because it's such a black hole or a black box. We just don't know what might happen. And so I might do this. I'll eject. There we go. Well, Mike, leave the room and then have him re-enter.
Yeah.
I think that'll be the best way to do that. But it's such a black box here because the IRS seems like this big, dark, scary monster that is continually, out there, and it's a little bit of a scary deal. I personally have never dealt with the IRS, but gosh, I don't know if any of your clients have ever experienced that, Keith.
Some have, and I personally got the letter one time that something we did was being looked at and they had issues with. We had a qualified tax person, a tax accountant, who had done our return, and she went to work, and guess what? The IRS backed down. She and I think that goes to the value of having someone who knows what they're doing. You've heard me say, it's not always a good idea to cut your own hair or do your own taxes. And I think this is a good example of that. Hopefully we'll get an indication here that Mike is getting back on to join us, because we've got some great chat questions coming in here too.
Yeah, we do have some really great chat questions. Really appreciate it. Raj, we're definitely going to touch on the Bitcoin thing now that we're in a new world with new investments. How does the IRS deal with Bitcoin as far as, how do you document and report that? That's a really great question. Thank you, Raj. And then another question is how does the IRS select people when it comes to tax returns and audits? We'll jump on and get that from Mike. There he is. Hey, Mike.
You're back. Can you hear us?
Hey, guys. Sorry about that.
Hey, you're good, man.
I can, yes.
Good. Okay.
All right, good deal.
Go ahead, Taylor. Should we do some chat questions?
I want to jump into a question from one of our audience members. He asks, how does the IRS select individual tax returns for audit?
A lot of red flags. They've got a list of red flags that their computer system picks up on, and unfortunately, I don't have that list. However, when I get a tax return, Taylor, I can tell what and how the IRS arrived at deciding to pluck that for an audit. I recently received an audit letter from a potential client as of yesterday. And the red flag for me was this particular gentleman has property abroad. And the items the IRS is auditing for aren't necessarily red flags per se, but that property located abroad certainly is for us. And so that's one red flag. And taking deductions that aren't appropriate with the amount of income that someone's reported. That's another huge red flag that I see with audits when we get them come across our desk.
So would that be like a ratio, or would it be a dollar amount typically? Like if you wrote off something that was very relative to a percentage of your revenue or income, how do you see that?
It's more, I mean, I hate to say it this way, but honestly, it's more of a feel. So let me give you a quick example. Real estate agent travels a lot for work, drives everywhere, showing people property, etc. $50,000 mileage deduction on their tax return, and we had someone who did that actually. And so, $50,000 in mileage terms is like 100,000 miles. So, I don't know how you drive 100,000 miles in any given year doing really anything, and so that's going to be that's a good red flag to kind of keep an eye out for.
Like long haul truckers don't even have that.
Yeah, exactly. Yeah, exactly.
Home office. There have been times when it's gone either way, when they've said, boy, if you do that, watch out. And then there are times that they say, well, that's no longer the case. And now we seem to be entering into a time when more and more people are going to be working from home. What are your thoughts about that?
Yeah, I think home office is okay. My main criteria for home office, I don't want to even call it a criteria, but the IRS's criteria for home office is that it remains to one office. Now, we all know that people sometimes don't work in one space. It seems like you guys are in one space. When I work at home, I'm generally in one space, but a lot of people might work from their couch or from their kitchen. And so taking the right amount of square footage, Keith, is probably the best answer to your question. Taking a reasonable amount of square footage. I had a woman who tried to take her entire basement for her office space. And this was a pretty large basement, 1,200 square feet. And then she tried to write off her remodeling expenses. So the IRS didn't allow those, to say the least, in the audit when we represented her.
So we had a great question coming in from Alexis, and her question as relates to COVID. I also noticed that on your website, and I'll push our audience to go to your website. You have an amazing blog where a lot of really good details. Every couple weeks you update that blog, and you do a great job of doing very concise deals where it's not these big long-winded 1,000-word deals. You can get through it in 200-300 words, 3 minutes of reading. And you had one specifically on COVID. And Alexis, let's touch on your question specifically. COVID has taken a hard hit on people. Should I still file even if I can't pay?
Great question, Alexis. Thanks for chiming in. Yes, absolutely. The filing deadline was July 15th. And if somebody hasn't filed quite yet, I would file as soon as possible. The IRS is still assessing late filing penalties, especially if you owe a tax. So the only way the IRS can assess a penalty is if you owe a tax, right? So if you file late and you have a tax that's due, that penalty starts at 5%, goes up to 10, all the way up to 25% for the late filing penalty alone. So I always recommend to folks, hey, even if you can't pay it, go ahead and file it because you'll save yourself 25% of the tax debt.
Wow. Then there's a thing called, and I got this on your website. It's a wonderful site, and I had never realized that this is a thing, currently not collectible. Might that apply to Alexis? What is currently not collectible?
Currently non-collectible is a great strategy. It's a strategy we've actually used more consistently since COVID hit. And that strategy allows taxpayers to get back on their feet financially. What we do is we present financial data that discloses that the taxpayer can't pay their past due taxes or even maybe their present taxes. And the IRS shelves the case for 18 months to 2 years. It's a fantastic strategy, Keith, and Alexis, if that's part of your question, to dealing with back tax liability. If you need some time to get back on your feet, and it works for business taxpayers too, which is wonderful.
All right,
nice.
then we have another question from Raj, and it's in light of kind of the modern world that we're living in, and that is Bitcoin, cryptocurrencies, and all of that. What do you look for in documenting Bitcoin investments, and then I guess what kind of documents are necessary from your perspective, and is that something that you've had to deal with other clients?
It is. Raj, thanks for the question. Another wonderful question. So we've actually represented a couple clients that have Bitcoin, and they've been involved in an IRS correspondence audit. And Bitcoin's an interesting one because in reality, all the documentation that's presented is self-presented. And when I say that, meaning the taxpayer produced the document. And so what we used, in all honesty, was Excel spreadsheets. We used taxpayer data that they put into Excel spreadsheets. And to be candid, we relied on the Bitcoin investor to enlighten us as to what they had, how many trades they might have made, and the data that they presented. And then what we did was we compiled that data and then turned that over to the IRS. And so Bitcoin's one of those interesting topics where us as professionals, we actually really rely on the investor to provide the right information.
Can you go a little bit deeper into documentation? What constitutes documentation? What about things like handwritten notes, receipts, people who might not keep books, checkbook registers? What constitutes documentation?
Yeah, great question, Keith. So in an audit situation, really any document that is showing the source of the activity, we call it a source document in our profession. I don't know what you guys call it in yours, but any bank statement, canceled checks, check registers, mileage logs, calendar printouts, if we're looking at an audit of some type, things of that nature that show the source of how the taxpayer arrived at the number that they took on their tax return. And so what we're looking to do is, if the IRS is challenging a number on a tax return, or in the instance of a Bitcoin situation, we need to make sure we can provide the right information to the IRS that discloses, hey, here was the taxpayer's original investment in this coin. Here's how many trades this person made over the course of that particular tax year. Here's that activity in an Excel spreadsheet is what we've used in the past. And then here's how we arrive at their calculated loss or gain. And so we need to be able to see the numbers first before we present that information to the IRS. And then we compile it, use cover letters and exhibit sheets and affidavits and things of that nature to really present to the IRS and show them, hey, here's the situation.
Can you give us any more examples of things that you've recently seen turned down, or things that are most often turned down? You gave us the basement, you gave us the 100,000 miles on a car. I'm curious, as we get deeper into that list, maybe small things, mistakes that are frequently made, things that are turned away.
Sure, yeah. I think things that are turned away mostly, paper receipts, right? Paper receipts are super challenging. And with our hourly rates set at what they are, no one wants to pay us to go through paper receipts. And so often what we do is we encourage the taxpayer to go to a bookkeeper. Hey, you've got paper receipts, great. Go to a bookkeeper, get that stuff, create some books, right? Because we do have people that come to us without books. And it's important to see if we can come up with a set of books. Paper receipts are tough. One, they start to, as you guys probably know, they start to fade after a while.
Right.
I'm glad restaurants and office supply places and any other expensive business might have is starting to email receipts over, because you could save those as proof of your expense rather than keeping a crumpled up receipt in your wallet for months and going back to it
and saying, I can't believe I tipped that person that much.
Exactly. Yeah. So paper receipts are tough. Sometimes mileage logs, the IRS will accept them. I'll accept them, but those are tough too, because who keeps a mileage log, right? Who keeps a handwritten mileage log in their car when they're driving somewhere for business? Yeah. I used to keep one, but with COVID, I'm not driving anywhere for business anymore. So I don't know that keeping one's even worth it. Now they have those mileage IQ apps and things like that. We recommend those to taxpayers so they can have something electronic, something they can present that makes sense.
My father, I guess my wife's grandfather was he died when he was in mid 80s, and he kept a mileage log, so he knew what his mileage that he was getting, mileage per gallon he was getting in his car, and that he was very diligent about that. So I don't think he was doing it for the IRS's case. But you've talked a few times here about different types of audits, and I never really didn't dawn on me till you said that you had a correspondent audit, I think the word was. What are the different types of audits that one could undertake or be examined by the IRS from?
That's an awesome question. So correspondence audits are the audits that come in the mail. IRS sends out a notice. They say, hey, taxpayer, we're challenging the fact that you took this expense, that expense. Mail us in your response. Okay, that's one type of audit. The second type of correspondence audit is, hey, taxpayer, we received information from a payer that you didn't put this on your tax return. A lot of times it's investments, right? Hey, taxpayer A, took 50 grand out of Fidelity IRA and didn't report it on their tax return. Or maybe they did a rollover and they didn't think they had to put it on their tax return, which it's always a good idea, by the way, to put that on your tax return. It's just a net tax due of 0, generally speaking. But point is, the IRS gets the reports from the brokerage houses, and then if it's not on, if it doesn't match the return, they'll send out that correspondence audit and propose a tax that's due with penalties and interest. Now you have a chance to challenge that. It's not an actual bill from the IRS. Staggering statistic, by the way, the IRS collects, it's got to be close to $20 million a year on those notices alone, and half of those notices are incorrect.
So
and lastly,
they're receiving money that they really shouldn't.
Isn't due. Correct. Yeah. Because people get scared and they pay it versus thinking that they can challenge it.
Wow. Programs that allow us to do our own taxes. I have personally never gone that route, and I don't think I ever will. It scares me. Are they a good idea? And if so, who might they be a good idea for, and who might they be a not so good idea for?
Sure, Keith. Tax programs are great for the person who is a wage earner with one job. They get a W-2 at the end of the year. They've worked one place all year long, and they plug in that W-2 into the tax program, and it spits out a number, whether that's a refund or a small balance due or what have you, and they're done. Those programs are great for that client. I'd say everybody else, hire a tax professional. Hire someone. I don't even prepare my own taxes, and I'm in the accounting space. But hire the right professionals to do. It's an investment in your financial house, really, and the goal with that is to reduce your tax bill as much as possible for that particular year. And so, why not see if you can do that and come up with some ideas for your future? And that's where you gentlemen come in with financial planning to avoid tax down the road. Yeah, we always recommend using professionals.
When we do a plan for someone, people are usually surprised when I tell them that taxes will most likely be the largest annual bill they pay for the rest of their life. And they're surprised.
Mm-hmm.
And then you shared a story with us earlier about people who have businesses, who are successful, who have totally ignored taxes. How can that be? How can that be?
It surprises me every time I see it. We have clients that are very successful business owners, and they generate a lot of cash into a lot of different businesses, and they somehow have, at one point in time or another, accrued a tax bill that's also very large. And a lot of times people look at it as a way to leverage themselves into, boosting their business model. If they didn't pay their tax bill for that year or a period of 2 or 3 years, but they've grown their business significantly, they just look at it as another cost of doing business, which in our opinion, obviously isn't the best way to do that.
Sure.
Yeah. So it's still mind-boggling to me, Keith. It really is. I wouldn't be able to sleep at night if I used the IRS to leverage my practice to grow it.
Wow.
So, Mike, in your blog, you kind of, and this, I think this gears, you talk about how high income earners don't pay their taxes, and that it's a like $50 billion problem, or maybe even more. I feel like when I write a blog, it's usually because there's something happened in my business that it's like, oh yeah, I want to write something about that. Have you been seeing high wage earners skirting the law and getting away or not getting away with paying the IRS?
Yeah, we have. And eventually the IRS comes around to working the case. The real reason behind that article, Taylor, is The unfortunate circumstances when we get a high income earner and we get a case where they owe the IRS 4, 5, 600,000 or into the millions, those cases for some reason drag out with the IRS. The IRS sort of plucks the low hanging fruit, 30,000, 50,000, 80,000, 120,000. And they let those larger cases they don't go by the wayside. I don't want to say that, but they take a lot longer to resolve. And so it is a big problem, Taylor. It is a big problem. Those higher balance dues that are owed, we feel as practitioners, it would do us a service, it would do our clients a service to really work a little bit harder at the IRS to work those case files. But as you already probably know, the resources at the IRS aren't great, and aren't, in my career, haven't seemed to get better or improve over time either, unfortunately.
Yeah, we've heard that they've been paring down their IRS auditors, their agents here in the Denver metro area significantly over the last half dozen years or so. So the IRS is one of those things. It would be, you don't really want to be associated, or they've got a bad name or a bad rap for sure, but they do provide a fundamental service to us as a nation, and really part of why we can be so reliant on our government agencies and things of that nature. So I see that there's absolutely that need to have the IRS. So are they as scary as they seem?
They can be, yes. When we entered into a relationship with an IRS agent and we're working a case file, our job is to take work off their plate. We want to make their job easier for two reasons. We want to resolve our client's account, number one. But two, we know we're going to run into them again down the road. And with that said, we want to make sure that we're building relationships with these folks. We've worked with most appeals specialists, auditors, and revenue officers in and around the Denver area, and several outside of the state of Colorado as well. And so, it's really our job to see if we can build relationships with these folks. Because then when they come back and sit in our office and visit with me and say, "Hey, Mike, I got this client. He owes us 50 grand. What are we going to do?" There's a layer of trust that's already built with us. When they come in right out of the gate, they're barking, they're biting, they're not happy. They think everyone's out to cheat them out of money, and we say, whoa, hey, we're here to help. We're here to help you guys. We're here to help resolve this for you. So, yeah, that's a two-part answer there, Taylor. So.
Yeah, it almost sort of sounds like a lot of like attorneys. When you hire an attorney, I was a bit of a rascal as a young boy, and saw the other side of the law. And it was always interesting because the attorney has to have a good relationship with the DA or other entities that are in the judicial system. So it sort of sounds like you're kind of coming at it from that angle. So it does also sound that the wheels of justice with the IRS do turn slowly, but they do certainly turn. And so if you happen to be one of those high income earners that feels like, got away with it again, that stuff is going to catch up to you, huh?
Yeah, absolutely. It comes around eventually, and it comes around at some point. We hear stories through some of our existing clients. Well, my friend this or my friend that, or got away with this or hasn't filed for 15 years, and you hear stories like that, and it is hard to believe, because but at the same time, we all have to pay the piper at some point, and our clients come to us when they're ready to start fixing the problem, and whether high income earners or not, it's always a good idea, Taylor, to be proactive in these situations and be proactive with the IRS and resolving the case.
Love it.
And so that's also our stance when we're dealing with the IRS.
You said you just mentioned high income earners. Here's a good question off the chat box. Does the IRS have a threshold below which they don't flag tax returns?
In turn for audit, I assume, right? I'm not
that's what
sure.
the question is.
Okay.
Yeah, I know that if it's over 100,000 in income, you have a higher chance of being audited. But that's also not to say I've seen audits come through where the IRS is auditing the earned income credit for something, and they made $50,000 that year. So, I don't know the threshold if there is one, and if there is one, the bar is probably set really low, because it depends on the tax position and it depends on the deductions the taxpayer is trying to take, I'd say, when it relates to some sort of audit from the IRS.
And then another quick one from the chat function. Are TurboTax prepared returns audited more or less than the average?
Oh man, these are good questions that are coming in, guys. We get a few clients who have prepared through TurboTax and they were audited.
Really?
But I'd say on the whole, our audits that come through are mostly self-prepared. And self-prepared when I say that, or they use TurboTax, or maybe they just didn't use TurboTax at all. And then, that's a tough question. Honestly, I don't know how to answer that. I apologize to the viewer who wrote in. I wouldn't use TurboTax if you got a complicated return, is I guess I'll answer that question. Yeah, anything over a W-2.
So one of the things that we talk about, and everybody wants to know, and I know you're not a tax planner or you're not even a preparer. You've got filled your niche and you do a fantastic job of that, and you've helped taxpayers battle the IRS and fight them and get level. Now, with that said, are there legitimate ways? Now, again, people come to us and say, Taylor, how can I don't want to pay taxes, and they want to skirt the law. They want to do all these things that are very aggressive. Have you seen some legitimate ways that are not illegal that taxpayers can save money on taxes?
Yeah, we've seen several legitimate ways. We do offer a little bit of consulting to folks that may come to us midway through the tax year or closer to the end of the third quarter, and they're looking for some advice in relation to their particular tax position, and they want to know, hey, Mike, how can I save more money in taxes? Right, to point to your question, Taylor. A few different sort of off the cuff here ways to save money. Charitable deductions is a great way to save money. Pick your favorite charity, pick a handful of charities, and start donating. My personal favorite, I'll give a shout out to the Wild Animal Sanctuary out in Keensburg, Colorado. I love donating to those guys. I love their cause. I love everything about it. And it does help me save some money on my tax return. That charitable deduction goes under itemized deductions. And if you've got a house, that's another really simple way to save money on taxes. If you don't have a house, go out and buy one if you're in a good financial position. I know houses are very expensive right now, but the money is practically free with interest rates being between 2 and 3%. That's another great way to save on your tax bill. And then third, starting a business. Starting my own business, doing something I love, doing something I'm passionate about, helping people, helping my community. That's enabled me to save a lot of money on my taxes as well, because I get to deduct quite a few expenses through the practice, and then that's a flow through to my individual tax return, and it's much better than being a returner, I'd say.
Oh, that's awesome. I love that. Thank you.
No problem, man.
Let's turn the page to the times we live in. A question to introduce a ton of questions that come after the first one. What direction are tax rates likely to go from here, up or down?
Oh, wow, that's also a difficult question. You can look at it from two perspectives. I think in the short term, the government is trying to do a few things to reduce taxes or at least delay payment of taxes. They haven't made any changes to rates per se. But in the long term, as you guys know, the government's handed out a lot of cash
they're going to need to get that cash back at some point down the line. We're in an election year. That always brings about quite a few tax changes. I imagine the IRS will also make quite a few changes to their collection procedures given COVID. I know that's kind of a tangent to your question. It's going to be real interesting to see what happens, especially after this election. And 2021, 2022 is going to be an interesting year to see how much Congress does enact to change how people are set up and taxed. The world is an ever-changing place, and especially now, our country is changing in a lot of different ways. And so I can only assume that taxes will be a part of that.
We could certainly possibly see tax rates go up. Then there are capital gains rates. There's talk of that going up. But the one that seems to invoke the most conversation, the most debate is the concept of a wealth tax. People call it confiscation. What are your thoughts about that? As a taxpayer, with the knowledge base that you have, would it be possible for us to see something like that in this country, in your point of view?
And when you say wealth tax, do you mean wealth tax on the living or wealth tax on the deceased? Because that's an important piece.
Wealth tax on the living.
On the living, yeah. We've got to get it from somewhere, right? We've got to fill the coffers from somewhere. And I'll use the example of state taxing authorities to highlight the answer to your question. A lot of states don't have income tax, for example, right? Mm-hmm. And states like Texas, Wyoming, Washington. And with that in mind, they have to collect tax from somewhere. And so where do they get it? Real estate taxes and sales taxes. Mm-hmm. So if you increase the tax in one place, such as a wealth tax, right? And you have to you'll be decreasing taxes in another place, whether that's real estate, sales tax, employment taxes, or even income tax on the lower income earners, right? And so, I don't know that necessarily, I don't know that I could speak professionally to a wealth tax. I know I've heard a lot of people coin the phrase, the flat tax. Will that ever happen in our lifetime?
Good question.
That may take place, go down to a 10 or 15%. I still think you're going to have folks that don't pay or aren't able to pay. And that's usually the question I get, right? Is, well, if we go to a flat tax, Mike, you're not going to have a job anymore. Again, the point is you got to collect it from somewhere. So there's going to be other taxes that are due in other places.
That's fantastic. So we're kind of getting to a little bit of the last part here, and
sure.
You kind of brought something up. I think that there's going to be a place in the world for me. I don't think the robo advisors are going to, all of a sudden knock down and make us obsolete. At least I certainly hope not. And I certainly don't think that there is going to be, you're not going to be out of a job anytime soon. That's for sure. So with that said, we had a question come in and says, when audited, how much money can a taxpayer expect to save by going through Highland Tax, or as opposed to going at it by themselves? And so I guess I'm hearing or reading between the lines from this question, that is, why hire you? And does that actually save the person money?
That's a great question. It's a question I often get. It's a long-winded answer that I'll make short-winded. The answer is it depends. It depends on the issues they're up against. But here's what I'll say. When you go before the IRS on your own, you don't know what you don't know until you're sitting in the office with the auditor. And the biggest mistake I see people make when they represent themselves in an audit or before the IRS in general is they say too much. We had a good example of this. We had a woman who came to us too late in the game. She had an FBAR audit, foreign bank account reporting audit, And it covered a scope of 10 years. And by the time she came to me, she had to appear before the IRS via a legal summons. Backstory to that, when she met with the IRS originally, they were auditing her 2014 tax return for something totally unrelated. And she wouldn't have been in that position had she hired us at that point in time to represent her in that audit.
Ask the question, only the question.
Yes, exactly. She answered one question wrong, and it was a tailspin into, oh, I worked in the Caymans for 10 years. I, did this, I did that. Yeah, and as soon as the IRS hears Caymans, I mean, you think of all the movies, right?
Oh yeah.
And it opened up a 10-year scope for her. And it was scary. It was really scary for her. So we can save a couple $1,000s and save some penalties in an audit situation, or we can save such a large and tangible amount of time and effort and energy and fees to us for representation if someone decides to go through us. And our goal in an audit is to keep it within that scope. Let's make sure the IRS colors what's inside the lines. Once they start coloring outside the lines, that's when those audits get messy and expensive.
What are two things, two questions in one? What do you fear might happen in the future with regard to what you do? What do you fear the most with regard to tax law and regulations? And on the other hand, what might you look forward to happening in the future?
Oh, wow. That's a really good question. I'd say my number one fear, and I've thought about this, is our job becomes obsolete due to some sort of robotic situation. IRS decides to use automated systems and not real people to conduct audit, collection work, etc. And they make it to where you can't negotiate with them. You can't call them. You can't talk to them. You can't have a human on the other side of the phone to talk to about the problem. That would be my fear, is if the IRS went that far eventually to where it was just a non-negotiable thing. And your second question, what I look forward to with the IRS and my work in general is I look forward to continuing to serve my community. I don't think the IRS will transition to a robo type work in my lifetime, or at least I hope not. And if anything, knowing that in the next 10 or 15 or 20 years, I provided a wealth of knowledge to my community. I appreciate both you guys complimenting my website. I've had that site since 2013, and I've been contributing to it since then. And it's a lot of work goes into those posts, and it's just nice to feel good about providing educational material to the community we live in, if anything else. And yes, of course, do we need people to call us and hire us? Absolutely. We're in business for profit. But moreover, we're in business to help people. And that's what I pride myself on, and that's what I look forward to continuing to do in the future.
So, Mike, how would somebody get in touch with you? What's the best way? And then maybe give your the best way to connect with your website as well.
Sure. So you can call me directly, 720-398-6088. I'll provide that number again, 720-398-6088. Website is also a fantastic way to contact me, or just simply Google Highland Tax Group. Our Google page will pop up. All of our contact information is there. Multitude of social media sites such as LinkedIn, Facebook, Twitter, and of course, give us a follow on Instagram, Highland Tax Group Inc. We're constantly putting up stories on Instagram, and we put our posts there too. And then last, our website is www.highland, Highland, tax, resolution.com.
Mike, hang with us for a minute. We got one more question for you, but first Taylor's going to remind our viewers of the way they can benefit from your podcast.
And again, we really appreciate Mike being on today. If you want to get in touch with us, one of the best ways and maybe get out of the hot water or avoid the hot water with the IRS is to schedule a one-on-one consultation with us. So you'll use the offers tab and you'll be able to schedule a one-on-one call, a 15-minute call with one of our advisors. You'll get jumped to our webpage and put in your name, contact information, and one of our advisors will reach out to you, no obligation, to have an initial consultation to understand how we can serve you best. And then from there, we go into a discovery session. And that's where we uncover all of your needs and goals and desires that you want out of your current financial situation. So use the offers tab to schedule a one-on-one call with one of our caring and expert financial advisors with Presidential Wealth Management.
Okay, Mike, one more question. If there was one thing, the most valuable thing a person left this hour remembering, what would that be?
Trust your professionals. Hire a team of professionals. You know, have a good accountant, have a good CPA, especially if you're in business for yourself. You do not want to mess that stuff up. It's complicated. Taxes are complicated. Paying employees is complicated. Hire a good professional. Automate your payroll, and surround yourself with good financial planners, and find a good attorney, and have these folks in your pocket, and you'll have a team in your corner when you're ready to face the IRS and Highland Tax Group as well. So that'd be my takeaway from this, and what I would leave for the viewers is just surround yourself with a good team.
Mike, thank you. Thank you for joining us. Mike Wallen is president of the Highland Tax Group. And again, you can reach them through their website, highlandtaxresolution.com. For Taylor Leary, I'm Keith Weinman, reminding you that we would love your suggestions on future Eagles Nest webcast topics. Send us your questions, send us your topic ideas, and you might very well see them on a future Eagles Nest webcast. Send those ideas to webcast@presidentialwm.com. For Taylor Leary, I'm Keith Weinman, Presidential Wealth Management. Again, that website that email address is webcast@presidentialwm.com.
Thank you.
Presidential Wealth Management securities and investment advisory services are offered through Forta Financial Group, Inc., a registered broker-dealer, member FINRA and SIPC.